So that's why we do that. Also, recognizing that quite a few of you have the web portion but not the audio portion. For those of you that need to still call in, that access code number is 1866.
I'm trying to do it with my phone. Oh, here we go.
740-1260.
Yeah, no, I think this is good because it's talking about. I muted our line. I muted our line.
That's what I was supposed to do. That way you can joke. Without disturbing the whole group.
Oh, sorry.
All right, I can still hear a lot of background noise. So for those of you who need to figure out the mute, it is *6.
Okay, I already did that.
All right, so we were just having a little laugh here. I was mentioning on the webinar how folks could get connected by the phone, but they couldn't hear me if they're not connected. So I just wanted to do a little chat here. So we're going to get going here. Again, thank you to all of you for joining us. My name is Amy Sullivan. I'm the Director of the Montana Office of Gift Planning. The goal today on this webinar is to talk about how to approach donors, about plan giving, and the Montana Endowment Tax Credit. If you attended my webinar in the fall, it was way more detailed. This is not super detailed. It's more of a way to kind of get you comfortable with the idea of plan giving and to broach the topic with plan giving donors. So we're going to go ahead and start. You know, here in the United States, we are a nation of philanthropists, and I always like to put this number out here because for those of us in the field that work with donors, sometimes we can feel like, oh, how are they going to give us money? Why are they going to give us money? And I just like everybody to be comfortable in doing this. And for donors, I like them to know they're part of a very large crowd. And so I always like to ask, what percentage of American households give to charity? And if you all kind of think about your target number there and how many, what percentage you think that is, I can guarantee you all are probably low. So the answer is 95.4% of households give to charity in the United States. This is a shocking number. Huge. We are a nation of givers, but it is always good to know this, and also that giving occurs at all income levels. So of course it occurs at all income levels, because if you're almost at 100%, many, many people give to charity in the United States, and it's a wonderful, wonderful thing to know. Also, it's good to know what motivates people to give. And the word values matter most is something that I've added, because if you look at all of these line items, you don't see one here that says tax benefit. And we spend so many time in plan giving talking about tax benefit, and it is important, but you can see clearly it's not in the top 10. The one to highlight, of course, is being asked. 48% of people give simply because they are asked. What's the best way to work with donors? One-on-ones. There is no alternate or no substitute for that. It's an opportunity to share the good work you are doing, and again, it's an opportunity to ask for support. If you want to move donors into planned giving, loyalty is the number one factor, an indicator that a person is likely to leave a large gift to your organization. Wealth is actually not the number one qualification. And the best way to encourage large gifts? Through planned giving. All right, if everybody can mute your line, I can still hear some background noise. For those of you, if you can please hit *6 or the mute button on your phone. We want to make sure that everybody else can hear. All right, what is planned giving? Well, this AFP glossary, Association for Fundraising Professionals, is your big, long definition. But the bullet point at the bottom is simply gifts to charity to be received later. That's what planned giving is. It's something that is thought about and planned ahead for. Pretty simple. When do donors consider making planned gifts? So this is something that when you're working with donors, if you hear them saying, oh, I need to do a will, I need to review a will, oh, my spouse has passed away, or I really need to get rid of some of the stuff that I have, or I don't know what to do with my stuff and how I'm going to pass it on. When you hear those kinds of things coming from your donors, if you have a good relationship with them, that's when planned giving can be very helpful. One thing that these all have in common is transitions. When people are involved in transitions of one or another, planned giving can come into play. So how do you start the conversation about planned giving? If you could see from that earlier slide, we need to start with values, legacy, community discussion. If you're a financial planner on this call, this will be of particular interest to you, but it's of interest to all of us because this is what donors are saying on a large scale about their experience with charitable giving. It was a survey that was done in 2003. It was repeated in 2013 to see if, knowing this information, people did a better job, and the answer was they still weren't using the information, so here's what they said. Now, and this is in regards to the relationship between a financial advisor and a client, but it says, clients seek values-based discussions, conversations about philanthropy. What are their goals? What are their passions? You notice it's not, do you want a tax deduction? That is not the first thing that needs to come out of the conversation. The study also said that less than half of individuals were fully satisfied with the conversations they were having with their advisors. So I'd like to encourage everybody that it's about getting to know people and what it is that has meaning for them in their lives, how they can help your organization, or how as a donor, if you're on this call, where your philanthropic passion is that really motivates people. And there's also some wonderful studies about applying behavioral insights to charitable giving. As much as we're lots of individuals out there, but as much as we'd like to think that we and ourselves alone do things in a vacuum, it's not always true. And what they found was that a simple social example increases giving threefold and also doubles the amount given. So what is a simple social example? Many of our customers like to leave money to charity in their will. Are there any causes you're passionate about? When this was tested, they broke people into 3 groups. And these were people working on their wills. This was a large study. It was 3,000 people. The first group was asked nothing about charity, just let's do your will. The second was, would you like to include charity in your will? And the third was, many of our customers like to leave money to charity in their will. Are there any causes you're passionate about? And it was a huge increase. Threefold increase between the person that was not asked at all to this in terms of people who then put charity in their will. And again, double the amount they normally gave under the other scenarios. So it's something to pay attention to. Also, when you approach donors, if you know that a donor is open-minded and creative, planned giving works best with those donors. If people already have their mind set, they come to you and they know exactly what they want, it's kind of hard to say, hey, have you thought about looking at these other options? Have you thought about a charitable gift annuity or charitable remainder annuity trust and what that can do for you? So if you know donors are open-minded and creative, or if you can ask them to sort of go on this journey with you to find what could be best for them, you're going to have the greatest success. Also, planned giving frequently involves taking care of people. Many of the planned gifts that I do help people solve an estate issue. In some cases, it helps them deal with a child that they don't want to give a bulk amount of money to. They're worried that that child, in some cases there's an addiction issue and that child might spend all of the money at once. So I've actually done charitable gift annuities where it's a set amount of money to a child, and yes, they may still blow that set amount of money, but they still have enough left that if they can kick the addiction, they have means by which to live in the future. So I'm finding more and more that plan giving is about taking care of people and about helping charity. Then we start to get into the technical stuff a little bit. It is important to say, we are one of 4 states in the nation to have an endowment tax credit. It's a unique opportunity. The other states are Iowa, Kentucky, and North Dakota. And of the 4, we have the best tax credit. It's also important, I think, to mention that having the tax credit is not always a given. It's set to expire 12/31/2019. We will go to bat to extend that, but it's not guaranteed that it will be. So now is the time to take advantage of the Montana Endowment Tax Credit. The Community Foundation also paid for a commissioned study called Montana's Transfer of Wealth, and I know a lot of you know about this, but I always think it's worth mentioning over and over. This is a chart I like to show people the most because it shows the transfer of wealth occurring in the United States, Montana, but then also rural Montana. And you can see in the United States, that's the kind of curve you want to see. In Montana, flattens out quite a bit, but it's not like the blue line, which is rural Montana. And so in working with donors or in speaking with community members, it is really important that we keep some of this wealth here. And it's important to take care of our heirs as well. I never want to say that. But if this place has given us so much and is the environment in which we raised our children, I think that it's also very important to leave something here for the next generation. So just a chart that's kind of good to show people, to encourage giving, and a sense of urgency here. If you can see from this chart, we're in 2015, we're right at the spot where it's going to start to decline for rural Montana. So the Montana Endowment Tax Credit. We need to know a little bit about this if we're going to say to people that it's something that we have here and it's a wonderful opportunity. So I'm going to explain it a little bit. It is a credit. That's in all caps because it's not a deduction, it's a credit. It's what accountants love. It's below the line, so to speak. So when you see what taxes you owe, this is money you do not have to pay, you get back. It is not a refundable credit. So if you owe $250 in Montana taxes, which I'd like that bill, and you have a credit of $10,000 you don't get, it's not refundable. You would just then not owe Montana tax. It's for a planned gift made to a qualified endowment. They use the word qualified. Qualified means that you are a charity that has an endowment policy where you do not spend down the principal. It is protected, and you only distribute the gains or the interest in that account. So qualified charity, you're in good working order for the state of Montana, and it's an endowment by its definition. There are 2 components to the Montana Endowment Tax Credit: individuals and corporations. Individuals, planned gifts only. They must make a planned gift. I'll go into that in a little bit here. Gift must go into an endowment. The credit is equal to 40% of the charitable value of the gift. If a donor gives you a gift of $10,000, the charitable value is not $10,000. It's going to be a number, if you run the numbers right, very close to that. But the charitable value of the gift depends on many factors. It depends on the age of the donor. It depends on when the planned gift starts making payments. It depends on the vehicle itself. But if you're just speaking with donors in general, I usually say a $10,000 gift, if done for tax credit, maximum tax credit, you'll usually have a charitable value very close to that $10,000, maybe $9,800, $9,700. The maximum credit is $10,000 for an individual, $20,000 for a couple. I want to reiterate that, $20,000 for a couple. We had lots of confusion this the end of the year about Department of Revenue. There was just confusion that between accountants as well that you could only have $10,000 per couple. No, you can have $20,000. It's $10,000 per taxpayer. So it does mean that the spouse has to owe taxes, has to be earning, has income with which to offset it. And there's also another caveat with this I'll go into in a minute. To achieve that, to max out the tax credit, it usually happens with a contribution of $27,000 for an individual or $54,000 for a couple. Corporations can also benefit from the tax credit. It's 20%. Maximum credit is $10,000. So that's a gift of $50,000 to max it out. Applies to corporations, small businesses, partnerships, limited liability. The corporations do not have to make a planned gift. And that makes sense if you think about the fact that you're not going to give an annuity payment to a business. So they just have to make a direct gift, so a cash gift, to an endowment. So I have a question here on the Montana Endowment Tax Credit of must a couple file jointly to get this? No, you can also file, in Montana you can assign value to a gift. So in other words, when you file separately, you can say you made a $10,000 gift. How much do you want to assign to your spouse? How much do you want to assign to yourself? I also have a question of whether we can get people can get a copy of the presentation. Of course, if you would like a copy of it, well, number one, this will be on our website, but if you would like a copy of my PowerPoint, just email me and I will send it out. Also, to make sure for plan giving in Montana, make sure you are registered with the State Insurance Commissioner and that you meet all of the requirements to do plan giving in Montana. We have had quite a few nonprofits who thought this was easy, they could do it, and they've called panic-stricken because they don't have the necessary software, they don't know how to calculate the credits or the deductions, and it really creates some hardship between donors and nonprofits. So if you have done this and you would like to call me, we can help you with that. But also just make sure that you are following the guidelines to be able to do these planned gifts. You can put your charity in a lot of hot water if you don't do it. Another issue that came up is that only charities can issue charitable gift annuities. Believe it or not, we had a financial planner at the end of the year issue 3 charitable gift annuities for which he can't issue charitable gift annuities. They were commercial gift annuities. And when his client went to file taxes about a week ago, they discovered those are not charitable, and so he has quite a problem on his hands. So I thought that was worth mentioning too. What does planned giving look like in Montana? I think for a lot of people it's like, planned giving, what is that? It's big and it's scary. And when we talk about charitable remainder annuity trusts and flip trusts, and yes, that's complicated stuff. And that's why there are those of us who do this every day that get a little bit more expertise about it. But really, what does it look like in Montana for your purposes? %85% of all planned giving in Montana is wills and bequests. So if you simply say in all your literature or on your website, please remember us in your will, you will be doing 85% of what charities who do this for a living every day do, 85%. So just remember that. The majority of the remaining 15% that we do, 13 to 14% of it is charitable gift annuities, whether they're deferred or immediately paying out. So if you learn enough about these two, you'll be set for planned giving in Montana. The last little bit, charitable remainder trusts. Those require quite a bit of expertise. Those usually involve large amounts or transferring of property, and we do those here as well. But if you just cover wills, bequests, and charitable gift annuities, you can see that you will be covering 98 to 99%. All right, I just have a couple questions here. So going back to the tax credit, the question was, so an individual cannot make a cash gift to an endowment and still receive a credit? The answer is correct. They must use an instrument, a planned giving instrument. And if you look at this, you're not going to get the Montana Endowment Tax Credit for a will, something in your will. It's for those charitable gift annuities. And just so you know, a breakdown, probably 90% of my charitable gift annuities are deferred because that gets you the best tax deductions. Another question is, do churches have to register with the insurance commissioner and have $300,000 in assets? Yes. In order to do plan giving in Montana, you must be registered with the state. They consider these plan giving vehicles, they aren't insurance, but they consider them like being able to do insurance. So thanks for those questions. So we hope that none of your donors or that donors on the line wait till this point, because I don't think St. Peter would be very happy if you put them on hold to look for more charitable deductions. So let's talk about bequests, gift, and your will. And just as a sideline, they've also nationally tested the word bequest, and it doesn't move anybody to do anything. I'm just not quite sure. I think a gift in your will, when you do your literature, don't say bequest. But I do this to remind me that bequest does not move people. The name, the term. And a gift in your will is good for anybody with a will or trust. Any of us can do this. Gifts identified are excluded from federal estate and state inheritance tax. The exclusion for inheritance tax for 2015 is $5.43 million. This does not affect most Montanans, but for those of us, or those of you who are land-rich, cash-poor, that adds up pretty quickly. Here's some sample language for you. I can also email you more sample language. Of course, since I get to run this webinar, I get to put the easiest language. Don't we all want a donation for our general charitable purposes? But this is the kind of language you can supply to a donor and they can put in their will. And it's easy to make this request of donors. So please, all of you, just remember to mention this. So how do you approach donors about their estate plan? You say things like, remember us in your will. Your support means so much to us now. Would you consider taking care of us in your will? This is really an important line. I'm running across a lot of nonprofits who had a lot of annual donors who passed away, and they weren't, the charity was not put in the will of these individuals, and we've got well-known, long-established charities in some financial bind because their annual giving is going down because the older generation tends to give more of those gifts. So it's just something that to have a good conversation with some of your annual support donors. Again, supply your donor with suggested language. Now they will always have their own attorneys as well, but it's just good. It makes them feel comfortable to have some language to look at. So charitable gift annuities. It's a contract between you and a nonprofit, that's the donor and a nonprofit, that involves the transfer of a gift to the charity in exchange for income now or income later. So that's the only difference between what they call a charitable gift annuity or a deferred gift annuity, is the income is received later. The charitable gift annuities are appropriate for older individuals wishing a higher rate of return on investments. We go with the Council on Gift Annuities rates, and some of these rates I think are really great rate of return, 8, 9, 10% rate of return, and especially during those years we had the recession, 2007, 2008, people who had charitable gift annuities never felt that downward trend because their payments never changed and they're getting a good rate of return. Again, it's another way to take care of donors. If they find they need some income later in life, it is a vehicle for them. Deferred gift annuity, this is perfect for any donor wanting to help charity and take advantage of the Montana Endowment Tax Credit. The tax treatment is you get a charitable deduction/credit received for the portion of the gift and no capital gains on transfer of assets. So transferring of stock is a good way to fund a deferred gift annuity.
Sure.
So a couple things.
I don't think I've
Remember I mentioned this $20,000. I want to make sure that we take this confusion out of the conversation that we're having, as long as we understand that you have to itemize your taxes and your spouse has to have income with which to offset the credit against. The bottom line is something that I saw a lot of at the end of the year, and that's to make sure that in order to get that $20,000, if you're transferring stock, make sure that before that stock is transferred to the charity that both spouses' names are listed as owners. Now a lot of times for financial reasons, one spouse will own stock and another spouse will own different stock, but this changing a beneficiary, adding a beneficiary is something that can be done with one sheet of paper with your financial planner before you transfer, but make sure you talk about the tax consequences for that. But we did have a situation where someone transferred stock and then wanted the $20,000, but it wasn't in both their names, and Montana law does not allow it. So how do you approach donors about charitable gift annuities and deferred gift annuities? Listen with open ears. If you can hear people saying they really would like some steady income when they're older, that is a perfect candidate for a charitable gift annuity. Or if you hear someone say, wow, cattle prices were way up, I sold a lot of cows this year, but boy, my taxes are high. That is a perfect opportunity for a deferred gift annuity to lower their taxes. But again, remember, they also have to be charitably minded. If someone has no care for charity, it really doesn't matter how much of a tax deduction you can get them. First they have to care about charity. Then you can come in and help them with the deductions and credits. Another thing, and some folks don't want to see the fruit of their labors while they're alive. They want to do a will, and that's great. That's fine. But for others, I encourage them to say, it's amazing what your charitable giving can do now, that you can partake in it and that you can have a role and a hand in your charitable giving as you're alive. And funding CGAs or DGAs that then go into a donor-advised fund is a fantastic way to do this. And another thing to say is that higher tax bracket donors could receive 70% of their gift back once they file their taxes. This is with a deferred gift annuity, and the way that we structure them in Montana, by Montana law, we can defer it all the way out to life expectancy. We can cap the rate of return at 5%. And when we do that, we get these 70% of the gift back. And so what that means is if you have a donor who gives you $10,000 in December, when they file their taxes and they get their money back, they will get $7,000 of it back by April. We have a lot of folks who take advantage of this. Now that's the highest tax bracket. If you're in the 25% tax bracket, it's more like 50%, and so it is based on your wealth. But 70% of your gift back is pretty nice. So kind of a funny thing, we have to add a little bit in here. Sometimes you make a lot of effort, and you might get someone's pet twinkles, but it's still worth it. I don't know. I think I'd take a dog around here. We could use a dog in the office. So, are there any questions?
I have a question.
Yes.
So the deferred annuity, or either annuity, the current or the deferred. So the donor makes a contract with the organization. Now, you have the same risk that you would have if you do it with an insurance company, right? What if the institution doesn't handle the money right, and the proposed annuity gets cut back, or worst case basis goes up in smoke? How can you be sure that doesn't happen?
So this is why you want to make sure, if you are a donor and you approach a charity, that they are registered with the insurance commissioner, number one. When they are registered with the state insurance commissioner, they make commitments, and that is that they must set aside half of the value of a planned gift in an account in which that money is sacrosanct. It can't be spent, it can't be used, and it can't be put into risky investments. And the law, accounting best practices say this because the way that these annuities are structured, the American Council on Gift Annuities actuarial tables show that the charity gets 50% of the money of the original gift by the time all the payments are made. Now sometimes they get less, sometimes they get more, but the average is 50%. The other thing is that if something happens and a charity goes bankrupt, there are still assets, and that's where the Attorney General comes in and determines how to make these payments. So we feel very comfortable here because we are a larger charity. We have $75 million in assets. We aren't likely to go bankrupt. Our assets aren't invested into one stock or into one building. I mean, they're very diversified. So number one, make sure that the charity is large enough to handle these. Number two, that they're registered with the state. Number three, as a good donor, I would ask to see their investment policy. I would want to know how an organization is investing their money and to see their risk tolerance. If you do that, I think the chances of you losing your money are close to nil. Can the end of the world happen and stuff crash? I suppose so. But I think if that's the case, your money's going to be in trouble no matter where you have it.
Okay, thanks.
You're welcome. Any other questions? I did not go into the charitable remainder trust because we do so few of them in Montana. If you do find you're in a position where someone wants to transfer land or oil and gas leases, that would be a good use for that as a charitable lead trust. Just call me and we can walk through some of those processes and help you with that. That's why we're here. That's another thing I would like to mention too, just in terms of the community foundation, we don't represent any one charity. So we really are an agent of the philanthropist. People come to us because they want to support 10 charities, and we work with them to make sure that that can happen. So it's a joy for me anyway to be able to do that and to just increase philanthropy in Montana. Having spent 10 years representing one charity, which I enjoyed immensely, but I felt a little hamstringed by not being able to just raise money for all sorts of projects and things in Montana. So,
Amy, I have a question.
yes.
Can you hear me? I wonder if you can go back to the graph.
Yes.
I don't really understand the decline, the rural declining. You mean? I didn't understand the graph. Maybe you could just repeat that.
Absolutely. Let's go back to it. So what is responsible for this decline? What's responsible for it is children don't want to work on the ranch or the farm anymore. Children don't live here. They live out of state. They live in Oregon, they live in California. And so when mom and dad pass away, the estate goes to Oregon. In California, the land is sold. So the bulk of that is rural life.
So you're saying there's a potential for encouraging rural Montana to try to keep their wealth here through donations? Is that what?
Yes, through helping charities. So let me give you a couple of examples. So working with a couple in central Montana, they had a $2 million ranch. They had a $56,000 basis in the ranch. So their taxable portion was close to $2 million. So when their accountant ran the numbers for them, they were going to owe $980,000 in taxes if they sold their ranch. They could have done that, taken the $980,000, purchased whatever they wanted to, had fun, and I want people to have fun, gone around the world, blown it all, let's say. None of that money then stays here in Montana. Instead, what we worked out with them was that the ranch was transferred to the Montana Community Foundation. We sold it. We love the opportunity. I come from a ranching background, so this is someone who's going to keep that ranch in production. We love and want to do that when we have land. So this was sold to what's happening in a lot of rural areas, an individual who wants bigger acreage because you need a lot more land to make a good living. So we did that. We then were able to give this donor, he and his wife, close to $1 million tax deduction for that gift. They qualified for a $20,000 Montana Endowment Tax Credit for last year. And we set it up as a charitable remainder unitrust. Unitrust means that the payments are variable based on the market. So their first payment is $100,000 a year. The calculations say that within 8 to 9 years, we're going to be paying them $180,000 a year for that donation for their lives. He's 83, but his wife is 68 years old, so we could be paying this out for 30 years. And we're comfortable with that. We're fine with that. When they both pass away, we, by our actuarial calculations, think we will have $1.5 million of that donation left, because we don't just sit on the money. We do invest it and grow it. And at that point in time, then the income off of that endowment is going to help animal shelters in central Montana. So this was a scenario which is going to keep $1.5 million, and that's going to continue to grow in Montana for the benefit of charity, versus a donor selling their land, paying half of it to Uncle Sam. And so for them, this scenario worked beautifully, and they get income like they've never seen as ranchers. Also, when you do a planned gift, not all of that income is taxable. A good percentage of it is tax-free. So these are the kind of things we're doing. When I said be open-minded and creative, you know, I say to a lot of people, I was just in Forsyth and worked with, 4 different people on some ranch discussion. You know, we can't save everything, and we can't help everything here at the Community Foundation, and I don't want to say that, but we can be an integral part of these discussions about estates and of ranches. There are ways to take life insurance policies. If you have a situation where you have a ranch, one child doesn't want the ranch, the other child does, that's not an inexpensive way to go, but it is a way to save your ranch. So we just like to help people with those discussions so that curve does not look like it does. The other thing to mention is that I spent 10 years in the history realm, and you know, if you learn anything from history, we as human beings have always had what they call urbanization trends and ruralization trends, where we move to the cities and then we want the more rural life and we move to the rural areas. And so for me, for personal, you know, when I go out and speak with people, these rural areas are fantastic. They are wonderful places to raise children. And I believe that at some point in time, our future generations are going to want to move into the rural areas. But what will they have to come back to? If we don't do our work now to save some structures, to do some oral histories, to help what charities are there, when government makes cuts, charities usually come in and pick up the slack. So I just think it's a wonderful opportunity for us to take care of the places we currently live in, but also provide something for those future generations.
Thank you.
Welcome. So I have a couple questions here. Could a person with a Montana medical savings account give the balance not used to the Montana Community Foundation and not have an income consequence as an example? I don't know the answer to that question. That's something I'm going to have to research. That's a good question. So I will do that, and I'll get back to that person. Also, how would we know if a charity is registered with the state? Number 1, ask them. Number 2, call the insurance commissioner. So that would be Monica Lindine's office, and ask. I do not know if there is, there might be a list online that does that, but I don't know how up to date it would be, and when you're wanting to make a donation, you want the latest information. You can fund any of these planned gifts with a number of vehicles too as well. So if a donor says, you know, they don't have cash, but they have a Scriber bronze collection that their children don't want, you can also take those to fund a gift annuity as well. Again, you have to be a big enough charity to handle that, the liability. For instance, you could take the bronzes, and then what if you can't sell them and you're paying out for that? So just be careful with those, but you can take art to fund a gift annuity. You can take land, obviously, and cash and stock. It gets really fun when you start working with people on these vehicles. But again, be careful. And if you have a full plan giving program and you have questions, call me or email me. I'm here to help. You'll see at the lower right hand of the screen the Montana Office of Gift Planning. The Community Foundation Board of Directors created this office in July. I came on board in July as well. And the reason that they did that is I'm here to help everybody. I'm not here to just help people who have accounts with the Community Foundation. So I'm here as a resource, and also if I get questions like this about the Montana Medical Savings Account, I'm learning and I have good sources to go to find answers. So thank you so much for being a part of this and being part of helping this great place. So does anybody else have questions? I'm ending a little early. I didn't want to make this too complicated. I think last time when I did this, it can be really overwhelming. But I'm hopeful that I gave you enough information to kind of let you go out there and begin discussions with people, or if you're a donor, to talk to a charity about a way that you can help in a means or in a vehicle with which it is the most of a benefit for you. So if you would like a copy of this presentation, my email, which is at the bottom, I'll give you my contact information, is amy@mtcf.org. And there's my phone number.
Okay, thanks,
Right.
Amy.
You're welcome. Thank you, everybody.